Right, up till now, the holding company has always acquired 100% of the issued share capital of another company, so the another company was a full subsidiary of the holding company. In example 5, though, P Limited acquired 60,000 shares in S Limited on 1 January 2019 for 75,000 Rand. Statement of financial position of P&S assets, PPE 23 and 50. Investment in S Limited, 60,000 shares at cost price, 75,000. Trade receivables, 112 and 86. Equity and liabilities. Share capital of P Limited, 100,000 shares. S Limited, 80,000 shares. So now you can see that we did not acquire all the issued share capital of S Limited. We only acquired 60,000 divided by 80,000 equals 75% of the share capital of S Limited. Then retained earnings, trade and other payables, and total equity and liabilities. Assume that the identifiable assets acquired and the liabilities assumed at the acquisition date are shown at their fair values. P Limited recognized the equity investment in S Limited in its own records by applying the cost method. P elected to measure any non-controlling interest in an inquiry at their proportionate share of the acquiree's identifiable net assets. Number 1, like in all the other questions, you have to analyze the owner's equity of S Limited. And there you can clearly see that the owner's equity of S Limited is share capital of 80,000 and retained earnings of 20,000. And remember that we've acquired 60,000 shares at 75,000 Rand. So, there's the equity, share capital 80,000 and retained earnings of 20,000. We have acquired 75%, so P Limited has acquired 60,000 Rand of the share capital of 80,000, and then it means that if P Limited has 75% of the shares, somebody else must own 25% of the shares, and that is our non-controlling interest. They then have 25% of the shares. Right. The same thing, retained earnings. We didn't acquire the full 20,000, we only acquired 75% of the 20,000, which is 15,000, and then the other 25% is owned by the non-controlling interest of 5,000 Rand. So the total equity and reserves of S Limited was 100,000, of which P has acquired 75,000, and the non-controlling interest actually owns 25,000 Rand. How much did P Limited pay for his 60,000 shares? Well, there you can see he has paid 75,000 Rand. And they also told you that here, they didn't have to tell you that. They told you that twice. They also told you that they have bought 60,000 shares for 75,000 Rand. So the consideration that P Limited has paid was 75,000 Rand. So what was the net equity that he acquired? 75,000. How much did he pay? 75,000. So there's no difference. He didn't pay more or he didn't pay less for his portion of the equity of S Limited that he has acquired. The proof of the goodwill, the consideration that he bought was 75,000. 25,000 belongs to outside shareholders, non-controlling interest. So the total equity that is actually held by those two parties equals 100,000 Rand. What is the underlying value of the net identifiable assets? Now guys, you can work it out. There's the total assets, 136,000, less the liabilities of 36,000, and that brings you back to the 100,000 Rand. So the identifiable assets and the liabilities assume 100,000. So the amount paid by P Limited plus outside shareholders is exactly the same than the underlying value of the net assets. So there's no goodwill or gain on a bargain purchase. The third part of the question, like all the others, wanted to do the pro forma journal entries. Now in the pro forma journal entries, we have to identify common items, and that is always all the same. It's the investment and it is the capital and reserves of the subsidiary company. So the investment we're going to take out, share capital, let's start here. Investment in S Limited, that is in P's books. We're going to credit that investment. And then in S's books, we have to take out the share capital and retained earnings. So we're going to debit share capital with 80,000 and retained earnings with 20,000. So those two full amounts and that one there. Now, it is not going to balance because that's 100,000 and that's only 75,000, but we have already actually concluded that the non-controlling interest is equal to 25,000 Rand of the total equity amount that we are working with. So we're going to create a non-controlling interest. The statement of financial position, this is only something that happens on consolidation, and that equals 25,000 Rand. The next one that they want from you is the worksheet, and then they want a consolidated statement of financial position. So in the worksheet, I'm going to start off by dropping down these two statements of financial position as they gave it to you as a starting point in my worksheet. So there it is, P Limited, S Limited, with all the descriptions that they gave you in the statement of financial position. So that's our starting point. The second thing that I'm going to do is to pass my consolidation adjustments, which is exactly equal to my pro forma journal entries. So I'm going to take out the capital, reserves, and the investment, and I'm going to create the non-controlling interest. So there I took out the investment in P's books, 75,000. Here we've eliminated and taken out, so debited the retained earnings with 80,000 of S and S of the share capital of 80,000 of S and the retained earnings of 20,000 of S. And then in order to make this thing balance, you can see there's 100,000. We've only acquired 75%, so 25% of 100,000 equals 25,000, and that belongs to the outside shareholders, the non-controlling interest, 25,000. Now for the rest, it's only an adding sum. 23 plus 50 equals 73. 112 and 86 is 198. Share capital will only be that of the holding company. Retained earnings is only that of the holding company. Non-controlling interest is now going to be added there, 25,000. And trade payables is going to be the sum total between the two. Our consolidated financial statements, well, the statement of financial position is going to be exactly those figures. So total consolidated PPE is going to be 73,000. There it is, proper heading P Limited Group consolidated statement financial position as of 31 December 2018. Assets, non-current assets, PPE, 73,000. Current assets, trade receivables, 198,000. Then the equity and reserves, share capital will only be 100,000, retained earnings 26,000, and our non-controlling interest is actually part of our equity account. So non-controlling interest 25,000, that adds up to total equity of 151,000. Current liabilities is my total trade payables of 120,000. And then this balance sheet is actually balancing on 271,000 Rand.